I just really enjoy coming here every Saturday morning. I hope you guys do too. So today is quiz day.
Yeah.
Woohoo! Are you prepared? If you have a question, raise your hand. You got a question?
Are we using our notes?
You can use your notes.
Oh,
You can use your notes. No. Don't you want to challenge yourself and see how well you can do without notes?
Yeah.
Maybe next
Yeah, let's do it. No notes. No notes.
Federal deposition insurance deposits.
Very close, very close. Federal Deposit Insurance Corporation, very good. What does the FDIC do?
Insure your money.
Insure your
so that
money.
if the bank falls out, you still got that. What is it? If you have like no, 200.
Up to $200,000. What is a budget? Why do you need a budget?
To stabilize the money and the things that we need.
To save your money.
Yes.
So you know what's coming in and know what's coming in.
Yes. Yes. All of that, right? So you're not walking down the street and all of a sudden your cell phone is cut off and you didn't have no budget. You spent your money on something else. What is a loan?
Is when you borrow money from a lender.
From a lender. And a lender could be who?
Anybody.
Anybody. It could be a bank, it could be your mama, it could be anybody. That's a loan, right? You borrow money from somebody else. Now, why might you have to pay interest to a bank? In what circumstances are you paying interest to a
Because
bank?
you got a loan out?
Yes, because you got a loan. Yeah, they charge you interest on the loan, right? So if you borrow $100,000, you're going to pay back more than $100,000, right? You're going to pay back 100,000 times whatever that interest rate is. Okay, so good. Why might a bank pay you interest?
For going to that bank?
For going to the bank and
Opening an account?
opening an account, and which kinds of accounts typically pay interest?
Savings?
Savings accounts typically pay interest and checking accounts don't. Why?
Because savings is
Because you're leaving the money with them.
Because you're leaving the money in
They
there.
can use it with for other people.
Yes, because you're leaving the money in there for a long period of time. They can use that money to lend to other people. Absolutely. What are assets?
It's like
Things you own.
valuable things that you buy that later will have value.
houses and something you own.
Yes, all of that. Your assets are the stuff that you own that are worth something, right? Okay, cool. So how do you come up with your net worth?
Your balance sheet. Your assets versus your liabilities.
Yes, you're all correct. Your balance sheet is the assets minus the liabilities gives you your net worth. Yes, very good. What does a credit score tell you about someone?
How well they manage their
How you
money.
spend their money, how you spend your money over time.
All of that. It tells how they spend their money, how they manage their money, how trustworthy they are. You know, their character. Credit scores are very important. Can you increase your credit score?
Yes, all the time.
Yes, you can. Lots of ways you can increase your credit score. We talked about that. How? What are some of the ways you can increase your
If you're a student, like in college, you can get what they call a secure credit card, and that's something I'm not gonna talk about right now.
You actually can, whether you're a student or not. So you can get a secure credit card. That's a really good way. And what do you do? What happens when you get a secure credit card? How is it secured? What does that mean? Yes, there is. There's always going to be a PIN code. But it's when you put money in the bank, right? And that money is going to secure your credit card. So if you put $500 in the bank, they're going to set that aside, give you a $500 credit card, and if you don't pay your bill, they'll just take it from the $500 that you secured it with, right? That's a secured credit card. That's a way to build your credit. Lots of ways to build your credit. If you go to a jewelry store, get a credit card and buy a piece of jewelry and pay it off. There's lots of ways to start credit, but you need credit because you might want to make a film for $2.5 million and you need credit and a loan, right? So they can trust you for a loan for.
So your tenant knows that you're going to pay them back out?
Yeah,
Or you're a landlord?
That too, yes, absolutely, that too. Buy a house, buy a car, right? Anything you don't have enough cash for. What was the Great Depression and when did it occur?
When all the stocks crashed.
Yes.
And they lost all their money.
In the 30s, late 20s, early 30s.
Yeah,
After World War I.
Yes, it was after World War I. Absolutely, good. And all the stocks crashed. So did we talk about why stocks crash?
Yes.
Why?
Because you said stocks is based off of hope and opportunity, and sometimes when you don't have the funds to supply that opportunity.
Basically, the stock market is based off of hope and optimism, right? So if people feel really good about the economy, then they go out and buy stocks into companies, and because they think so companies are. And then what was the Great recession.
Isn't like 600, 700 banks went out of business?
Oh, yeah.
Yes, and when did that, and what else happened? A lot of people lost jobs, hundreds of thousands of jobs, hundreds of thousands of people were laid off. When was it?
2007.
Yeah, about that, yes. And what prompted that? Do we talk about what kind of brought that on, that Great Recession? Did we talk about the housing market?
No.
Okay, that's a whole nother subject, but yes, you're correct. 2007 to about 2011, about 600 banks went out of business, and people who had their money in some of those banks that went out of business, did they lose it?
No.
No, because
FDIC.
the FDIC insurance, yes. Very good, very good.
So if you, well, it probably won't say, like, tell you what happened, but if you lose money in the stock market, and you said that the FDIC, like, how do you lose all of the money that you put into the stock market?
Good question, very good question. So the stock market is a whole nother entity. And so when you invest money in the stock market, you are taking a risk that you could lose or that you could gain. Now, the trippy thing about the stock market is when you invest in the stock market, you want to be in it for a long time because the stock market fluctuates. It's up, it's down, it's up, and it's down. And if you look back over 100 years, you can really see that fluctuation. But if you leave your money in long enough, typically you will gain if you are investing in the right companies. But the FDIC doesn't insure it. There's no insurance. When 9/11 hit, I had a ton of money in United Airlines stock because I just trusted them. I flew all over the world. I used to, have to travel all the time, and I just thought, United Airlines will never ever go out of business. And guess what happened after 9/11? They filed bankruptcy. And when a company files bankruptcy and the court allows them to file bankruptcy, everybody who is invested in that company loses. All the stock becomes worthless. So after that, I went and got a financial advisor who could really advise me, on how to invest my money, and somebody who is trained and really understands the stock market and that kind of thing. How to find a good financial advisor. You want to interview, financial advisors, you can find them at banks, you can find them at investment companies. Every bank has financial advisors. Companies like New York Life, Northwestern Mutual, Charles Schwab, all kinds of companies have financial advisors. What you want to do is you want to go in and sit down and talk with some, just like you did when you went into a bank, to see how you feel, right? How do they make you feel? And that's how you find a financial advisor. You want to ask, how do they get paid? That should be very transparent to you because financial advisors are going to get paid for helping you with your money, right? But you want to know how much they get paid. They should be very honest with you. They can either get paid a flat fee or they can get paid off of a percentage of the money that they make for you. Or they can get paid off of the percentage of your portfolio. So you want to understand that. And then you want to find somebody that has a very good track record. You want to ask them, how long you been in the business? You Google that company. And so there's different ways, but you want a financial advisor who explains things to you that you can really understand. If they're talking above your head, you don't know what they're talking about, that is not the person for you. So that's a very, very good question. What else?
We love you. Thank you so much for all that you do. Thanks for coming into our class and caring and giving the information that you gave. And I hope that those of you who are serious will stay in touch with her. Have your parents stay in touch with her, because not many people have relationships with a VP at a major bank.
Actually, I'm a senior vice president. Few people like me in banking anymore, and the problem with that is if we are not capital that banks have, our communities are going to continue to suffer, right? So, there's great jobs in financial institutions. I mean, I'm in marketing. I don't even work in a branch. I'm in marketing. I travel all over the place. I run a whole, multicultural program. I've done corporate diversity for another bank internationally. I've never actually worked in a branch, but I've been in banking for, 30 years. So